As we anticipate the upcoming Consumer Price Index, that is CPI, report, the focus is increasingly on how this data might sway the Federal Reserve's decision on interest rates. Scheduled for release by the Bureau of Labor Statistics on Wednesday, this report is expected to reflect a continuation of the trend we've seen in recent months, a modest rise in consumer prices. Analysts are predicting that the CPI and its core component, which excludes volatile categories like food and energy, will both show a 0.2% increase for August, maintaining the same pace as observed in July. This expected 0.2% monthly gain would push the core CPI up by about 3.2% year-over-year, a significant drop from the rates seen 2 years ago. Such incremental increases in inflation could be pivotal for the Federal Reserve as it debates whether to implement a rate cut at its next policy meeting. Currently, many anticipate a quarter-point reduction in rates, though if the CPI data shows any unexpected weakness, we might see a stronger push for a half-point cut. Recent commentary from Citigroup economists highlights that inflation data is increasingly being overshadowed by labor market reports in terms of its influence on Fed policy. Despite this, August CPI figures could still play a crucial role given the ambiguous signals from the August employment report. With mounting concerns about the labor market and economic activity, even a modestly soft CPI reading could prompt investors to bet on a more substantial rate cut. Key areas of interest within the report include rental inflation and motor vehicle insurance. Rental prices, which have seen some fluctuation, are expected to moderate after a recent spike in July. This moderation could signal a broader downtrend, as indicated by the BLS's all-tenant regressed rent index and a steady supply of rental apartments. Meanwhile, car insurance inflation, which has been a notable contributor to overall services inflation, may also show signs of slowing down, with expected deceleration in the coming months. Furthermore, while core goods prices have been on a declining trend, apparel prices, which saw a significant drop in July, are being closely watched. Analysts are divided on whether this trend will continue or reverse, which could impact overall inflation readings. In sum, the upcoming CPI report holds significant weight in the Fed's decision-making process regarding interest rates. With inflation showing signs of cooling but still above the Fed's target, and mixed signals from other economic indicators, the decision will likely hinge on the nuanced details of the CPI data and its broader implications for the economy. Stay subscribed for more videos.